This trading strategy made over $1,500, but not only that, its drawdown was less than $100. And the best part is it's completely beginner friendly because we only need to take one trade a day and it only takes us 5 minutes. And before we dive straight in, back down in the description, you got a nice 10% discount coupon for Forex Online so you can get it for a cheaper price. And let's dive straight in, and this time we're going to be trading on the pound against the yen. And this has an explanation, basically because we are going to be trading on the London Open. Okay, so at 8 o'clock in the morning, in this case for the London session, we are going to be opening a trade, and the rules are really simple, but they make a lot of sense. So what we can see right now is the actual London session, and if you didn't know, between sessions there's always going to be, or nearly always, there's going to be a connection. Okay, so be in between the London session with the next London session and the New York session with the next New York session. So you can actually apply this to the Asian session, to the New York session, but in this case this backtest has been done on the London. So how can we find this connection? Well, basically, if you have a quick look on any chart as the pound, mostly with the pound, we'll be able to see that this London session here will always be connected with this one. And what I like to look at is actually closing candle of the previous London session. As you can see here, this is a closing and the price opened above here. Okay, so this is the opening price up here, and the price came down and then went up. Okay, and as you can see, most of the times we'll see this type of connection. Sometimes you can see right here that we have this London close here and the price opened above here and dropped down to this one here. So we're always going to find this connection, or at least nearly always. Here we can see that this connection here, this is the London close, and in this case the London Open was just near it. Okay, it was virtually at the same spot. And as well, sometimes if the distance is quite high between the close and the opening, it doesn't actually always reach. But as you can see here, this was the actual close, and look where the price came up to. Okay, in this case it actually came to the wick of this close. So here obviously we must take this in consideration, but as you can see, there's always going to be a connection. And how can we take edge of this connection? Because obviously it's the most important if we want to make some money. So basically what I like to do is I would go to the London Open, so basically go to London session, and what I can see now is that the price right at the moment when it's going to open is quite far away from my actual London close. So what I'm going to do now, I'm going to open a trade focusing to reach this level here, not this one here, this is the previous one, this one here, that is the London close. As well, what we can do if the price is really far away, instead of aiming for the actual London close, we could aim for basically the bottom or the top, depending if it's above or below, of the London session. Okay, because sometimes if it's really far away, the chances are that it can push all the way back up are limited. So basically this is the best option if it's quite far away. And as well, in terms of what assets, for the London session, I would always pair with the pound. Okay, and in this case it's quite interesting because the pound against the yen, it's a mix of the close of the actual yen and the opening of the London session. So this can give quite volatile peaks, and this can actually succeed our needs. As well, we could do it with the pound against the dollar because the pound is opening and the dollar is closed. So obviously the pound is going to have more power in terms of movement. So as well, it can succeed meeting the previous London close and the next London Open. So now basically what we need to do, like I said, is open a buy. And how are we going to place our stop loss and our take profit? Well, basically first we're going to place our take profit to see the distance. And now we've got our take profit placed here. You will see it's 290 points, so 29 pips. I'm going to place the stop loss on a risk reward of a 1-to-1. Obviously you can change this around, you could leave it a bigger risk reward or whatever you prefer, but I like to leave it to a risk reward of 1-to-1. And I'm going to place my risk at a 1%. So there we go, there it's placed, and now we just need to wait for the price to develop. And as you can see here, price pushed down, opened up, and now it's coming up again, and perfect, that's it, take profit. That's everything. So at the end of the day, it's only going to take us 5 minutes because we just need to identify where the London close is, and where we're going to set our take profit. We're going to set it at the bottom of the top of the London Open, whatever. So now, just basically, we'd have to go again to the next morning, and there we go. Now what we can see is that it's got a bit more distance. Okay, in this case we can see that right now the price is more or less, well, that's 30 pips, so more or less the same. It looked like it was a bit more. So now, again, we can see our London close down here. So obviously, seeing the London close here and the London high, the high of the London session over here, I would actually leave it just here, because obviously there are chances that the price could just bounce off this level here and not actually hit to the take profit and just stay 1-2 pips away. And obviously, how we're not going to be in front of the computer because we're just going to set and forget, as they say, then obviously I prefer to leave it on the easier way. So now I'm just going to set my take profit here to the London Open, to the London high, and obviously my stop loss is going to be just above here at the risk reward of 1-to-1, and set this at 1% risk. And there we go. Now we just have to wait, see how it performs, and perfect, there it's hit. It actually bounced off the London Open. I mean, it's incredible how it works. And as well, we can actually find bounces or confirmations when, if we want to, maybe it's an uptrend and we want to find a good level for the price to bounce off, and it probably will go to that price. It's always a good way of trading as well, but obviously for this we'd have to be in front of the chart. But for this strategy that I'm showing you today, you can just literally set and forget your positions, and like I say, it can work with the New York sessions, with the London sessions, with the Asian sessions, so you can actually trade whatever time is good for you. I'm sure everyone has at least got 5-10 minutes to sit on the computer, open the charts and place a trade, so at the end of the day it's a really cool strategy. And now there's something interesting here as well. As you can see right at the moment, the actual closing of the London session is here above, and the London low is right down here. Personally, I would target first somewhere in the middle round here, then actually going all up to here. But as well, if we have a quick look at the market structure, we can see that we've got a nice push at the above, so we could actually reach easily up this zone here. So here, like I say, is a bit discretional in terms of placing this next take profit, but in any case, the actual experience will give you the key. So I'll leave it more or less around here, 25 pips. It's more than enough. Place a stop loss just down here at 25 pips, more or less there. And here, like I say, if we place a stop loss too small, in this case it's 25 pips, it's not a really big stop loss for the pound against the yen. But as I say, I don't want the price to come up here as well. You could place it up here, stop loss down here, and see how the price first hour, if you can actually see it from the computer, see how it maybe evolves. But if you're going to set and forget, I wouldn't leave it too far away, because at the end of the day, it could come near to take profit and then just revert completely, because at the end of the day, you're not going to be putting any trailing stop, you're not going to put break even, so you can't actually protect your position. But as you can see, it didn't work quite too bad here. It didn't come up to here yet, and the actual London session is finished. And as well, something that I forgot to say, if we place a trade and it doesn't neither go to stop loss or take profit, we're going to close that trade at the London close. Okay, so this is as well something important, because obviously what we're aiming is the London session to actually reach the previous London session. So after the London session is closed, it doesn't make really any sense, because the actual strategy doesn't make sense if we're trying to reach the London session with the New York session, because they're two different sessions and they don't mix together in that sense. So in any case, we just go to the next day, and as you can see, it's just as simple as that. Now we've got a quite strong trade here, and we have a strong push on the downside. And that's sometimes, if we have a really strong market on one of the sides, it could not actually push up again. And as well, here's the actual London close, and this is the London low, and I'm going to aim for the London low. Okay, even I would say to aim to this zone here, because we could see some bounces off here, and obviously the trades that are open from this London session that haven't been closed could easily close here with a little loss. So I would take it in terms of here, but let's take the trade and let's see what happens. In this case, the take profit would be like 40 odd pips. If we bring it up here, it would be like 53 pips. So I'm going to leave it here, because it could actually bounce off here, and I prefer to secure the profits instead of trying to max out. So let's place this stop loss here, the risk reward of 1-to-1, and put our risk percent at 1% and let's see how it performs. So, okay, it's coming up, perfect. Spot on. Let's see if it actually gets up to the above. It would have actually hit as well the London low and the London close. And as you can see, it tends to do the same pattern. Obviously, it's not going to work every single day, but when it does work, it's quite satisfying because at the end of the day, it only takes us 5 minutes to trade it. And in that term as well, it's really nice to do backtest with it because it's got really mechanical rules. The only thing that we can actually change a bit is the stop loss and the take profit. But at the end of the day, it's really easy to backtest, really smooth. So don't forget that down in the description, you've got a 10% discount coupon so you can backtest this strategy. And I would love to know your feedback. And let's go for the next trade. As you can see, price is pushing up, quite strong push up. And then we're finding the same scenario. Right now, the London close is right down here and we have the London high just up here. Personally, like I say, if I can take the trade more or less to here, I'll be more than happy because at the end of the day, I'm not winning more or less depending on the distance, because at the end of the day I set the risk based on percentage. So I'm going to place my take profit. So if I bring it round down to here, we're talking about 80 pips. It's quite a lot. So in this case, I'll be more aiming to something like 40, 50, yeah, I'll say more or less around there. And stop loss would be more or less 46 pips. There we go. It can happen that the price can actually just push up directly and never come back down. It's happened to me before, but at the end of the day, we've already made a 4% profit. And if we lose one trade, it's just a losing trade. I mean, there's nothing big about that. So let's see how this one performs. Okay, perfect. It's stop loss. Price tried to push down, didn't manage to push down. It was a lot of big volume on one side. At the end of the day, we can't go against that. But as you can see, really simple strategy, nothing big to add. As well, if you could actually check here, if we would actually placed our take profit down here at the 80 pips, we might have, yeah, we would actually have the stop loss here above, and we would be closing the actual trade down here because it's the end of the London session, and we wouldn't actually lost a complete 1%. So that's another thing that we can actually, if we stretch the take profit more, then we can actually obviously stretch more stop loss and risk less in terms of if the price doesn't go in our favor, but it might not touch our stop loss, and we could actually leave the position without taking a complete stop loss and just taking a partial. Like here, it would be more or less a 60-70% of the actual stop loss. But let's go on. And here's an interesting point. If we get the situation where the price is actually inside the previous London session, there's two options. We could either try to go to the actual London close, or we could just not trade. So in this case, if we want to go to London close, we just have to basically place our take profit to where the price actually closed in the previous session and put the stop loss at an equal of a risk reward of 1-to-1. But if we don't want to, because we think it might not come down, then we just don't take a trade. In this case, it come down because normally they try to connect the close with the open. But if that doesn't happen, it's completely fine. And we can just basically avoid the day and trade the next day. Now we finished the backtest. As you can see, more or less 2 months of trading, we made $1,500, but obviously this isn't the best part because our drawdown was really small, sitting at $36. Okay, at the end of the day, we can see the average profit and the average loss is risk reward of 1-to-1, 15% return. Now that is massive, and even better, we have a 6.12 profit factor, so that is crazy. And as well, we can see the equity chart where we lost these two trades at the beginning, and then it just pushed up and up and up. This equity chart is really nice to see, an 83% win rate. That is as well massive. Obviously, if we do 500 or 1,000 trades, it will probably go down because it's a really high win rate, especially as well the profit factor. Just remember, profit factor of 1.2, 1.3 is more than enough to actually make a living off trading. So profit factor of 6 is a great start off the backtest. If we can take this, and then when we're live trading, just have a profit factor of 1.5, I mean, that would be incredible. As well, if we come to the trading days, we can see that most of the days are profitable. So this is really nice because at the end of the day, it's only one trade a day. So you're actually looking at the calendar is beautiful. And as well, if we come to the exit optimizer, we could see that we could even optimize this even more. by placing a stop loss of 20 pips, a take profit of 155 pips, and a max holding duration of 14 hours. So it'd be a bit longer than the actual session, but it's saying that we could actually get some more profit out of it. And the good thing is as well that with the Exit Optimizer, we can actually check the sweet spots of our stop loss and take profit. And they say if we bring the stop loss below the actual 6-10 pips, we can see that the profit goes down. Meanwhile, if we're keeping it above, let's say 20-18 pips, we can see that it more or less sits at 2000. And as well, the stop loss, if we bring it below than 45 pips, 37, all that, we can see that the profit actually drops. Obviously, you'd have to find your own sweet spot in here where you're feeling more comfortable. But I think it's a great tool to actually find this sweet spot range. And let's say if my stop loss or take profit is going to be between 20 and 50 pips, that's the sweet spot, and I know that I can take a trade if it meets that criteria. Same as the max holding duration. As you can see, if we keep it too low, then the actual profit is going to drop. Meanwhile, if we keep it more or less open between 19 hours and 3-4 hours, so that actually matches the closing of the London session, we can actually have that sweet spot as well. So obviously I would leave this perhaps to the close of the London session, and I could actually pick a nice sweet spot between the take profits. So I've always got this more or less similar criteria in terms of closing the trades. So I said this, I hope you've enjoyed this strategy. I hope you've learned something new about the sessions as well. You can use the actual sessions to actually have a bias and a trend, so check that in as well. And like I said, don't forget the 10% discount coupon that you got down below. And always, my name is Jack, and I'll see you next time.